Okay, Brodies. London Session Live. Long time no see. Just woke up and okay, everything seems to work just fine. So this week's objections. I'm trying to be more mindful about my trading, follow my rules much better because last week if I look at my trade journal, what was this one? So for example, Friday, I took two trades. Neither of those followed my rules. Euro GBP on Thursday didn't follow my rules. Sorry, this is in a wrong day. But anyhow, you can see how I take a good trade, don't follow my rules. And then when I had that win streak here, 4 wins in a row, or actually the 5th win is one where I technically didn't follow my rules, but I need to reassess this a little bit because the break of the rules that I had here was super minimal and you could have argued that it's not that bad, but immediately after I start breaking my rules, I take loss, break even, loss, break even, loss. I had 5 win streak here, man. That's following rules. So the break and following rules is actually kind of hard when you try to be when you are a little bit mindless about your trading and you just kind of going with the flow, try to move with the intuition, and then you're like, okay, this is probably following my rules. Let me just try this out, and then it absolutely fails. So now I'm trying to follow my rules better. If I'm not 100% sure of the trade, I just will not execute that. We got DXY now, and I'm doing my DXY analysis right now. So let's start from there. What's DXY doing? Well, let's hop on to the weekly chart. How does that look like? Okay, let's start with the weekly open, which opened here. Weekly open. I'm sorry. Let's just have it like that. So weekly open. Where do we move after weekly open and the daily open, or whatever you wanna? That's simultaneously the daily open of Monday. So we open, have a small pullback to the upside and move to the downside. So what this means is, okay, now we've swept a lot of liquidity down here. Actually, let's just not go to the lower time frames. I wanna give you my high time frame bias first. So monthly kind of choppy. I couldn't really tell what this is doing. As far as I'm concerned, this looks more bullish because if you looking at the fair value gaps that we are creating here, we had a bearish one here, bullish one here, broke that. Now we got volume. Sorry, no, that's a BPR, balanced price range, fair value gap plus inversion. What do we do when we come here? If we are truly bearish, we should respect that, and we don't do that. We don't respect that. We close far above here, which means that first of all we got this massive imbalance here. We are probably willing to run this high. So because we are now bearish, we have swept a lot of these lows. I would be first of all interested in taking a projection of this week, just for the sake of it. I don't know. We are probably not able to reach that, which is totally fine. The most important thing in this is that we got these stacked lows here, which market swept in the monthly. So that's your sell side swept. Okay. Now we move to the weekly. Okay. What are we having here in this range? In this range. Well, you got your weekly order block. This is the extreme one. Which lines perfectly with that sell side, but that's really not that important. We got that feral gap. So this is high probability confluence, in my opinion, to go long when you have a bullish reaction out of area where you sweep sell side, you have massive imbalance in the weekly. The weekly close is like a huge hammer doji. This just looks like something that's gonna run to the upside. Plus, if you looking at the CRT that I've been kind of studying a little bit, CRT candle range theory. We got that weekly candle high and low. This is the candle range that we're looking at. Next week candle sweeps, turtle soups that previous low, closes above. There's a reversal pattern, which is even more better because we got all of those lows that we swept and delivery from feral gap. Everything is starting to line up for longs. So now the initial reaction in weekly is bearish. Are we not bearish? Well, it's not that simple. We're not bearish in my opinion here. We could be short term in daily bearish or anything, but this looks more like we are willing maybe to come back to that fair value gap down here. So I would allow price to trade back down here, sweep that liquidity and sell side, and maybe give me a shift to the upside in Tuesday or Wednesday. So that's what I'm kind of expecting right now, looking at the price action. Because yeah, you would definitely be expecting market to run these highs anytime soon in terms of the weekly context. But the lower time frame 4-hour structure supports more of the sell side action right now, so we are kind of choppy. So this could be like a action that you want to skip, but in my opinion it's fairly clear that we're right now trying to run these lows down here. But yeah, those losses that I have been taking, I surely need to be a little bit more cautious about this, so I might just be skipping anything that we get today if we are not looking extremely clear. But yeah, short-term bias is short for the XY. Maybe if you are like what I take only the A+++, have maybe wait first the XY sweep this and shift, and then you can start looking for trades. Hopefully that shift happens during Tuesday. That's what I would kind of hope for. Anyhow, let's just remove this shit. This can be here and that buy side. So that was what I on. That's what I'm thinking in terms of DXY. Let's take a look at Euro USD. So Euro USD should be long in the daily short-term context. Weekly context tells that this is CRT to go short. We swept a lot of buy side here. So yeah, choppy structure. You might want to skip that one, but we got the reason to go short in the XY, and Euro USD got even stronger reason because okay, we are chopping. Maybe you don't wanna trade this kind of structure, but it just seems that we're building these equal highs in that super. Look at that level, 1.08700. That's a psychological number. That's a level. That's a level. That's even level. That's something that the banks like to use. So even though we're choppy, this is a structure that you can trade. In my opinion, looking at the target breaker structure happens here in the hourly. Take an equilibrium of that range. I would say this is the best entry, 0.618, because that's the level inside of this. I would have more than likely take an entry around here. Looking at the we really shouldn't trade down here if you're bullish. So I'll just have my stop around there, or even the 4-hour equilibrium candle, like the. But yeah, I would have that around like so. Now, if it offers me a new entry, will I enter? Nope. It's not the right time. This is just a tape reading again. But yeah, looks bullish to me. This might be though something you wanna skip again. So yeah, this is the idea number 1, but like this is not a trade I would take. This is not my model. If it still offers longs during London session, let's say we're trading like down here, we get a nice breaker structure, I can take long. Okay. GBP USD, pretty much like just remove everything. GBP USD is a little bit different structure than Euro USD DXY. Sometimes it's super similar. Lately it's been a little bit different in my opinion, but let's just look at here. So DXY long-term buys long. So also with Geo, I'm expecting us to run this down here. So what does that mean? That means that we're bearish, but the daily structure again are bearish. Well, again, if you got that pattern here where you have a box. You have a box. Look at like this. You got the weekly candle open. If you let's say we are expecting bearish action, okay, because that's what we're doing. We're expecting bearish weekly candle, so we got the open. Where do you expect it to trade? Then higher, high. Then we drop low, chop a little bit, and close. Now this is not that good drawing, but you understand the point. We open here. For us to move lower, we need to break structure, or rather, we need to move down up first, so that we accumulate liquidity, we manipulate, we sweep that, then we distribute or move to the downside, and then smart money opens their position, closes their positions down there. So this is a power 3 formation where you just basically are looking for the initial judo swing, the fake move to the upside if you're moving to the downside in the weekly. So you can see how Monday candle just opened, weekly candle just opened, which means it's there. So if you're expecting bearish action, you want to see at first a little bit of the buy side action, and it can happen. It can happen like this, where you just trade to the upside, like so. Maybe we can have even like further trade, or maybe this is all that Judas Wing wants to give, and we just immediately dump. Now I don't think that's gonna happen, but that could happen. Now I'm expecting price to also with GU trade back up to these highs, and maybe these highs, and these stacked highs. I'm expecting market to trade back there because of the confluences that we saw on the XY and the Euro. So that's the idea here. In London session opens 9:30. Let's just look at the gold. So what's gold gonna do? Let's look at the weekly. So the idea was last week to draw to this weekly gap. Okay. We didn't do that. We came close, rejected heavily. So I'm expecting this to be a draw for the week. Market makers wanted to build some liquidity down there. That's just the idea. which means again weekly open, bullish action due to swing idea for shorts. Weekly, sorry. So the weekly target there, daily parallel gap here. I would rather see this being respected. So weekly parallel, daily parallel gap there, order block here. These levels need to be respected. And I don't know. The most important one is this because this is far up here, the 4 hour. But the daily order block here is important in my opinion as well. So I'm just annotate these ones because these are the more obvious ones in the high time frame. So okay, so yeah, here if you're looking at the bullish range, bullish gap broken, that's inversion. Bullish gap broken, that's inversion. So this just means that we are having a change in state of delivery. This is very clear target for me. Like I'm looking no longs. I'm not looking longs in the slightest bit. Let's quickly assess these pairs as well. But yeah, I'm monitoring the gold very well right now. Now, what I'm expecting? Well, we could easily see one more push above these Asian highs. Like I'm expecting Asia to create higher week. Yeah, that could be possible, especially with gold. Maybe with like GBP USD, Euro USD. That's not the most ideal situation, nor is that expected. Okay, so now we're pushing back down. Would I enter here again? I wouldn't. Based on the time I trade only. London session which opens 10 AM, my time is 9:35. But this is that kind of situation where you don't expect market to run the Asia low and then for the high because Asia already gave you quite a nice range like that. And swept on liquidity. Asia is delivering from fair value gap. Asia is giving you everything that you would want to see for market to long, so you wouldn't be looking at the okay. AUD should be longing as well. Oh, but plus we have nice liquidity up here, so that's also what I'm expecting to see. Market to push higher. So we got volume imbalance, and you can see how we respect that. Volume imbalance. That's large font, you know what I'm saying? So that's your volume imbalance there. I don't know why I wrote that. It was super inconvenient. But anyhow, if you wanted to, AUD could give you something like this because it's respecting the volume imbalance. Sweeping sell side. A lot of it. You're bullish in the XY anyways. We're respecting that 4-hour gap. Exactly, we got days equal highs in 4 hour. We broke structure in 15 minutes. I don't trade London in AUD. That's the problem here. I don't do that, but So pretty much this is not worthy of taking because AUD USD is New York pair. And that looks kind of clean. Again, I'm not in this trade. I'm just looking to. I just have the tool here because I'm looking to take price higher anywhere within this range for price. Do a move like that. Gold. So let's get back in gold. So the weekly draw to the downside. Expecting market to move down. Nothing else really. In which case, I'm not expecting market to dump if it leaves these kind of stack highs here. So what I'm expecting to see is market to at least turtle soup these highs before move lower, maybe even up here before it gives reversal. So Monday, this needs to be this is day we need to be careful with the action here because the Monday action is not necessarily lining up with the hard time frame bias. So there's also a chance for me to practice my discipline and patience and possibly stay out of the market for Monday. It's kind of annoying when you want to trade so hard, but what can you do? So here I got these extra symbols that I also like to trade every once in a while. AUD JPY only Asian pair, AUD NZD only Asian, NZD JPY only Asian pair. So I don't never trade these. Then I categorized these. So here are all the pairs that can be only traded during London. Pairs that can be traded in London and New York, and pairs that can only be traded during New York. So these are ones that I'm not looking at right now. I can only be looking at these pairs here. So there's a lot of them. And that's why I kind of quickly just assess what's going on and either dump the pair fully or add it to my flag list where I start to monitor it a little bit closer. So let's look at this. Euros HF. Maybe expect the market to retrace a little bit higher. Maybe like sweep this range low and run for a high at minimum. And that's the Asian range as well there. Now, I don't know if I like the structure necessarily. I might just leave it. It looks like a long in pair, but it's super hard to say. We're kind of choppy in the middle of somewhere, but at the same time it's hard to say. So I'm gonna just leave it. You can see how Euro NZD, this was the thing I tape readed. GBP NZD. You can see how I took that trade in Friday, swept us, ran for our TP. So this is why you have to follow your rules. The buzz was correct, but the entry model wasn't really followed, and that's why the loss happened. I shouldn't have taken it in that kind of choppy structure. That's the overall reason I lost. This is an important monthly high. Okay, so we come close to it. We don't really sweep it, so this could mean, I don't know what this means, but sometimes market just comes close and just leaves it, comes lower, and then goes for it after building some liquidity. So I'm probably not going to take anything in Euro NZD. I'm not trusting the pair. 4-hour night equal highs. I would be willing to take price down here before taking longs, but long is the idea for now. Equal swept down here. This could be lining up for something though. Euro JPY is not that bad looking. But again, this is something that would be needed to take against the downtrend to go higher, which I don't know if I like it. The daily looks kind of CRT, where you are delivering from fair value gap down here. You have that kind of doji candle, so this actually looks like a CRT to go along. So actually decently good looking setup. Euro AUD. Sweep at the lows, moving higher, but I cannot really identify nothing here. I don't like this. We're just keeping Euro GBP. Last week I was expecting market to run these highs, lows, but when I realized that we already had ran this downside liquidity sell side there, I understood that there's a chance the market just pumps higher. Now I'm not so sure how much far up, because we are downtrending anyway. Looks like this could be a sweep and kind of CRT where we close eye up. So I'd still be long anyways. The problem is that we are now looking to have this kind of reversal candle inside of this bearish fair value gap. So actually I changed my mind. We are probably bearish at least down here, and then I'm not sure where we're going, but Euro GBP should be left alone most likely. Although looking at this, if you're expecting market to take price towards this area minimum, the 50-minute structure actually is not that bad, because you could be looking to see a reversal or rejection in around here and then go for the Asia low. So the pattern actually works out decently fine. So I'm just flag that as well. GBP JPY. So Euro JPY, I was long in that pair. GBP JPY should be lining up with the longs. It's the 16 p.m. Friday candle, 16 p.m. So this is an SMT with Euro JPY. That can be a bullish sign, but again, that for our gap got swept in GBP JPY, whereas Euro JPY didn't take that. So, that wasn't even for our gap. That was nothing in the GBP JPY, but anyhow, we're still delivering from this gap, and we're printing SMT right now, so this looks bullish. I'm just trying to look at how London moves in relation to Asian session. It just seems like London respects the direction that Asian has established. So either Asia gives a reversal, as in here, but London doesn't take almost ever the Asian high and go for the low. Like, London doesn't use the Asian session as a liquidity. It literally likes to move to the same direction, which for me means that right now we're sweeping the Asia low. So I'm kind of starting to be hesitant for. I'm still thinking Euro JPY is longing, but there is a chance that that GBP JPY could be like a little bit giving up section, but it kind of refusing to move, and then it kind of consolidates in here, and then either New York session goes for the higher, or I don't really know, but I would be choosing to trade Euro JPY in this context. Although the relation between Asian session and London session is not different in Euro JPY, so we need to be careful with this. GBP CHF should be nice London pair usually. Weekly fair value gap respected. We're moving higher. We are going higher, so this is the range they would be looking to take price higher after the equilibrium. So maybe if so yeah, I don't really wanna. I don't know. I'm gonna just flag that as well. These are probably giving some opportunities, but it's different conversation whether they are a plus. Weekly high swept up here, expecting sell action at least a little bit. I may get a bearish parallel gap up here. I'm not really sure what to expect. Then price probably will tank down here. But again, we got the equilibrium not swept, so as of now, I'm not going to trade that, nor this CHF JPY could be in possible reversal point, but we are long term trending lower, so it could just melt all the way down here, not respecting any of the areas. So let's just keep that in mind. Let's keep that in mind, you know what I'm saying. Although we're delivering from bullish parallel gap, we kind of respect them. Break structure to the upside, we got this one, so if we now give like a bull rejection from here, shift structure to the upside, we got some bars out here, so Euro JPY was bullish anyway, and so which would mean that this kind of lines up with the Euro JPY, GBP JPY biases. What do you think, AUD JPY, AUD CHF, sorry. AUD CHF. I don't really like where we are in price, so we have swept all the sell side. CAD CHF, how about you? What do you give me? You know what I'm saying? A lot of sell side swept again. That's the trend in during this Monday. We got almost equal lows down here. That kind of range high is going to be swept. I don't really like this GBP CAD. Okay, so GBB cat has been longing. We have disrespected even this like inversion gap. We disrespect even that. Closing above. We close above this one. We are in bullish trend. We swept that low. So we got that high here. We are far extended, but we got these highs as well. So we do have a reason to go higher. So we are in a possible reversal point from which we want to reject to go higher. Now the structure is kind of jumpy while we are just building buy side here. Now I don't, again, as I've said before with other pairs, if we are bullish, I don't want price to stack these kind of lows here. That's the first red flag here. And so I'm kind of starting to be concerned about this and I might not execute, but I'm just mark these lows like this because I can. And no one can do anything about it. So stacked lows. Order block lines up perfectly with that fair value gap and consequent encroachment, so we put that order block level there just for the sake of it. And this is certainly something that I'm interested in, but I need to be fully aware of everything that's going on because that could still end up losing me. Oh no. So what's up in here then? EuroCAD, so GBP expecting the long, so EuroCAD is long as well. We got that long-term high here, but you know we're kind of slowing down the closer we get there, which means price could do something weird here. I'm expecting us to continue along though. Wait. EuroCAD, what are you doing, brother? Well, let's look at the Forex factory. Actually, I haven't even looked at the news. So, Monday no news. Okay, that was quick. So basically, GBP looks the one that's nicer in my opinion. EuroCAD would need to rebalance. In my opinion, this is like an kind of equilibrium hit, but I don't really like it. If I drew my, let's like take a look at that. So yeah, that's theoretically technically equilibrium hit, but in my opinion the structure is way too choppy. We need to possibly liquidate that low, so I'm not counting that as anything important. As hey, I would like to see, like, let's say how that 0.618 level lines up, and what do you know? I don't know if this is algorithmic or not, but it's almost perfectly with that low there. So if you hit that low, liquidate that low, possibly like respect this super small fair value gap. And that if you respect that fair value gap, I'm 100% sure that we're going long, but Yeah, GBB cat is just in the better areas right now to go along. So I would rather be looking at that. Now the problem is that okay, Eurocat doesn't have those kind of stacked lows, whereas GBCat has them, which I don't know if it's a good or bad thing. Could be a good thing because if Eurocat doesn't have them, then GBCat could be also expected to not sweep them. You know what I'm saying? I just have that. So 0.6118, 0.618, respected with that auto block fair value gap. It's looking bullish. Eurocat, I'm just flag that for the sakes of it. USDCHF. What was the idea here? London session opening in a minute. So yeah, we're expecting market to rush up there. That's simply the idea here. Oh, there's also weekly CRT that low, so we're expecting maybe all the way up here. Buy side. But yeah, bullish on the USDCHF. And how about let's just quickly look at EuroCHF because that's kind of in relation to USDCHF. Although I kind of looked at that already. So kind of just bear with me. So the monthly takes out that high, then runs lower. So maybe we are like the overall idea is to run all the way down here to the sell side. But the problem is that we probably cannot trade this because we would need like a market to take a little bit further up, then shift, and then move lower. And this is 4 hour time frame, so we're just gonna leave it for now. Monitoring. All these pairs are my monitoring pairs. Okay. Okay, I'll be right back. Yo. So let's get to the action. Let's see what we can have. Again, the expectation today in the markets is that we are having to take a counter trend trade, and I might be left. I mean, I might be getting a trade, but I might still stay out of the market because the counter trend aspect of the and the counter trend nature of the market today. Come on, boss. If I got a single watcher right now, that would be amazing. Usually there's no people in the streams, which is cool. I'm just trying to do this for me, you know what I'm saying? If someone is interested in me becoming profitable trader and building my conviction in the markets, that's the point of this channel, to kind of give like a peer support to fellow unprofitable traders, you know what I'm saying? But it won't be long until I can be considered a profitable trader, so just bear with me. So, as of now, the only way I could enter on Euro is if I get regular structure to the upside. Okay, one thing. Gold has that weekly fair value gap as a target, but the gold futures actually took that fair value gap. Let's just take that. Take a look at that. So gold, I believe it's it's futures. What is this? Hey yo, what the? I don't know what that was. Oh, there's some Indian shit. Let's go to Comex. I think that's the real shit. So yeah, you can see how we took that for value gap, which I don't think is a good sign. But we didn't take that still. Let's look at the forex, like different brokers. Forex.com didn't take that. FX Open did not take that. So pretty much none of these forex brokers. So yeah, no, we didn't take that in forex. So let's just see what we can have. So we're definitely shorting gold. The structure doesn't support it right now, so we're staying out right now. Let's just. So I would want to see market to induce these highs and reject again from that gap. Then I can be sure that we're shorting. But as of now, it's kind of like, okay, we're probably just going to melt from here. But man, I cannot enter off of this structure. This is not what I trade. This is not how I trade. So we just need to look for it, and if it goes without us, that's just something we need to deal with it. So Euro JPY CRT's turtle soups that low, which looks for the highs now. Price action is not the most beautiful one, so I'm just staying out right now. Chippy cat. Euro cat. It's almost like shifting, but it's kind of okay. M50 could give you a clean shift. Now, if I took this and I lost because market wanted to come down here and demo, I would be super mad and I would say that I'm breaking my rules. So again, that's the reason why I cannot also execute this one. And that's probably the reason why I shouldn't either execute GBB cat if it now sweeps. Hero GBB, what was the idea? It was to shift to the downside. Okay, right now we're giving a lot of buy side action, which means we're not really moving lower. We have now swept a high, so if we are delivering bearishly from this gap, it could be a good sign to go short. Let's just continue looking at this shit. Oh, GBP, GHF. Yeah, that was the equilibrium of the range. Oh, I'm a little bit tired, man. And then the USD-CHF idea was too long, so yeah. I would be super like it belongs if we had swept that low like that, but as of now, like if it was like that, but as of now, we didn't, which is not nice because now we got also equal lows down here, or relative equal lows. So yeah, I'm most interested in. I mean, there are many pairs that are giving possibilities, but like almost all of them are against the hard time frame bias. Gold is really the only one that's looking to give the lower time frame bias. Like it's looking to align with the high time frame bias, but I'm not really sure either about the lower time frame structure. So as of now, there's no way for us to enter it, like no single way. So I'm looking at this for the next around 40 minutes, and if we don't get anything, I'm just out of this shit. Not taking a fucking trade in this action. Even though USD-CHF like longer time frame, yeah, population, blah, 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 blah. You know what? How this looks like for me is we're delivering for a value gap. We swept buy side up here. We broke structure to the downside. Delivering from bearish gap again. We got some equal lows down here, so if someone is longing the USD-CHF right now, I would. This is not financial advice, but I would advise you to close your long positions. Now it could easily work, and I could easily be wrong with my bias, and like I'm still expecting market to run far up. But right now, long positions in this structure isn't something that you should be necessarily looking at. So I would advise you to close that shit immediately. Again, nice fair value gap, nice target up here in the daily. So, but I'm expecting if we are strongly bullish, we should give maybe a bearish Monday. So if you wanted to, you could short even this. No, I would never do that myself because that would be against the high time frame buys. And even though I'm expecting something like that to happen, I don't know whether or not it's going to happen. It could just shoot to the upside because if for longer time frame buys is to the upside and they want to take price higher, in that case they don't need to respect any of these bearish areas that they're respecting now, so they could just violate every one of them. But how my understanding of weekly kind of tendencies and daily tendencies work is that often if you are expecting like a bullish week, let's look at this as an example. We got a bullish week. Sorry, that's not a weekly candle. Let's take a bullish week. Like some very normal looking candle. Like from here. We got bullish week. Okay. So let's look at the daily candles. So that's Monday, Tuesday, Wednesday, Thursday. So this is like a little bit of an abnormal week, but you can see that before we move. So this is the weekly candle, so Monday to Friday. We go first for the lows and then we shift to the upside and then give a small pullback to close price around there. So before you're expecting the huge pump to the upside, you're expecting price to give like a little bit of the downside action down, and usually that happens at the start of the week. Now we got that in Thursday, so that's just that. So really I would expect market to trade a little bit lower again, trying to catch around to our, how did I stop up here, trying to catch to our, which would have, so this would be a possible trade to be in. Again, I don't know how many times I need to say this, but maybe I'm telling this to myself, but this is against the trend. I mean, it's kind of with the trend because you're dropping, so just expect dropping, but the hard time frame idea is to go long, so that's actually against the trend in that sense. Although the high time frame idea is to kind of reverse, so it's kind of like a hard situation to be in. And if you're having this kind of situation where you don't really have conviction in, like you have kind of conviction in both directions, but don't really have conviction in any of the directions, maybe it's just better to say, oh, you know what I'm saying? Maybe if we get like absolutely A plus looking setup, maybe I could like look to long or short in only that kind of situation. But right now, USD swept the Asia lows. GBP is shorting like absolute beast. And again, the XY is an area where you could sweep that low, but it's super choppy and it doesn't necessarily need to do that. We got maybe enough liquidity for us to just shoot, in which case this could just start longing immediately. And because we technically we got already into this fair value gap in this, we created our low nicely. This is possibly market maker buy model where you like a choppy one, but anyhow, this is the smart money reversal inducing these lows to move higher. So how this looks right now is that also the XY, this low, so that's Thursday 11 a.m. London session, and this is Thursday 20, so Thursday 8 p.m. So that's massive SMT. So even though we don't sweep the high, this is an SMT with the XY. So even though these are equal highs and you don't want to short against equal highs in your stop loss, as your stop loss, maybe this is working out actually. And Friday I was expecting to short. I mean, I wasn't expecting to short. I took short and that was against my bias and trend and everything that I was looking at. Right now, the same analysis stands where you had that order block respecting that. You had that 4-hour fair value gap. Bullish. Well, so respected that one. So now, what are we doing? Well, as long as the XY kind of validates possible shorts in EU, then that could be valid. And that could be happening right now. So, whereas in the Friday when I was trying to short, it was just something that kind of looked like lining up, but it wasn't really good setup because I wasn't really even sure what the XY was doing. Whereas now we're having a massive bearish divergence. So let's just stay with this. So the XY is really the guideline here. And even though I'm expecting these to be ran, the XY is in a similar area and it doesn't have that kind of thing here. So that's massive divergence again. Not only with that, but also with the Thursday Asian low. Asian high, sorry. So it's also massive divergence with this. So bearish divergence is stacking up. We're probably shorting here. Let's look at the gold. So gold feels like the cleanest one for me. Now the structure is nowhere near clean in lower time frame, but let's just keep looking at that. So now that we are seeing this kind of rejection and the XY is going higher, I'm not expecting these lows to get swept no more. This could be just massively bearish week where weekly candle looking at this is now a wick that we created. This is this Judas swing. We got too much liquidity down here. If we are now breaking like this, as we are, who's saying that we cannot short this from that fair value gap high? Yeah, that could happen, and this could happen. I'm not sure if I like the structure though. We need to be a little bit careful with this. Market maker sell model, SMT at the highs, smart money reversal. So if I still was a bad trader, I could have taken long there. Sorry, that was muted. Fucking hell. But yeah. Now I'm fully bearish because the XY is not respecting any of the bearish areas. It's not looking like it's going for there. The euro has massive divergences to go short. So I don't still like the structure that much. Like you could just go for some, I don't know, random fair value gap like that and go short if that gets stabbed. It's not really my model, so just bear with me. I'm a taper this. and maybe I will be able to monetize in these kind of situations in the future. But the DXY is seemingly running these highs right now. GBP USD already took them, the lows, all of them. So I don't know if that's really good or bad for the euro, because if we are shifting, that could be a massive divergence. But I don't really look at the divergences that much on GBP and euro. The correlation in DXY and euro is much more important, which gives bearish vibe heavily. So also AUD now I'm expecting it to short. We theoretically took that high. So shorts. You got a gap there. So this could actually give like a lot of RR there. So let's look at these pairs. We're not really dropping down. I don't like how we do that, and this looks like a market maker sell model towards these lows as a pattern. So I don't really know if I'm liking these JPY things as of now anyway. Plus we're not really doing nothing. GBP CAD again. GBP USD is running lower, so we're probably on GBP CAD also about to take these lows, which doesn't really give us a chance. Euro CAD, how about that one? Well, I don't know. Even if we are still bullish, we're probably going to run down here towards that gap or whatever is it. In 4 hour, was it daily? I don't know where that gap came from. Maybe it's like a 30-minute gap. Yeah, exactly. How about your JPP? It doesn't really, like, it's like 50-50 whether it's moving to the same direction with Euro USD, so it's kind of hard to try to correlate these pairs. So you kind of have to do your own thing with Euro GBP. Which right now seems like it's running that high. I'm not interested. Unflag that shit. Unflag that shit, man, motherfucker. So with the GBP CHF, what could be a point of smart money reversal? I'm gonna move that up there. So again, DXY is longing, USD CHF should long as well, which means that all the bearish areas that I marked down here are invalid. So let's just start this whole shit again. Actually, like so, because this is about a liquidity ball into daily. That's the most valid one. You can really have that huge liquidity ball daily fair value gap. So if you give a nice break structure to the upside, maybe I should actually long this. So yeah, the best possible chances are now USD CHF, GBP CHF. Okay, so I think your eyes kind of just dropping. Maybe it gives you that retracement to that gap. Do you wanna enter? I'm not so sure. Maybe I should. Like the problem is that I'm not so sure if this is my model. Which should say a lot. But if you think about it. So, what are we getting here? Well, the goal is giving some cleaner candles as of now. Let's see. Like, I don't really know if they're clean yet because we need to get like a fairly gap. So if it, So this is looking good in terms of shorts. If we induce now these motherfuckers here. So give me like a turtle soup for them, and then let's see what we can have. You know what I'm saying? Here with this, I could be willing to go long in terms of the short time frame structure, but again the hard time frame supports what? Well, good support belongs towards that area. Hard to say. This looks pretty nice, but I'm not going to take that one either. The pattern kind of works nice. This also looks like a CRT. Wait, I think we are moving a little bit too fast because we need to still wait 2 minutes, and I don't know if we're going to be in 2 minutes somewhere up here. So as of now, Euro has retraced into the gap, into that gap. I will taper this as a possible setup, but I don't tend to take this kind of. I want to take the initial kind of fairway gap. When we are dropped heavily, this is kind of like an odd one to me. I would be interested in that, but if I was really taking that setup, I would execute from that gap, or close, or low, whatever you want to call it. Also AUD. If your USD did this, I could be more willing to take a short here because the structure is more like something that could hold, whereas Euro USD has the structure is kind of there, but if you're looking at the, it kind of makes you hesitant. You haven't even flipped this bullish gap yet, and this 30-minute gap got swept though. We're not really creating any like breakaway gaps or like having any like the displacement part in here. Yeah, it's kind of clean, but all the action that happened here prior to that to the downside is kind of unclean. So So it's kind of annoying, but we might have to stay out of the market. If this works out, maybe I will be starting to utilize these kind of setups further in my career, but right now I need to be careful with this shit and maybe concentrate on gold if that gives me or ends up giving me something. So 5 minute break structure to the upside. See GBP CHF. It's not looking bad. I'm saying that. I'm telling that. Most certainly. So is there some gap that's supposed to be a breakaway gap? Like, so the problem is, I studied breakaway gaps a little bit, and this could be a breakaway gap. Which I'm still not 100% sure how to utilize that. Maybe it means that we're kind of tapping into that. Maybe I could have my stop here because we are not expecting market to retrace into that. I think because of the choppy nature in here, that's the reason why market maybe wants to retrace all the way in that order block. So in this kind of choppy nature, even if it's moving lower, it kind of likes to retrace as well. So that's why you could be offered like a nicer entry in this kind of structure. But if I was to enter again, I would just move from the equilibrium short, possibly. But I would be allowing market to trade all the way to that order block. If it doesn't respect that, then we're kind of fucked. Again, if you're, this could be just fuck windows because market is trading inside a bullish order block here, and we're respecting it almost perfectly. So this is not actually a good sign. We're delivering from a fair value gap. So this is why I don't want to enter into anything as of now. We're kind of respecting too much of both areas, and I don't. It's hard for me to navigate right now. You understand probably why. So whereas gold is kind of, it's not really giving us yet anything, but it's kind of establishing clear bias at least. So I think we can have a nice, possibly nice sell in New York during New York in gold. That GBP CHF got into that gap, which is, this is the real entry. If I wanted to take a long, I would reduce it a little bit for 2 hour. But again, not taking this either. The reason why I'm staying in the sidelines is super clear for me right now. Also, US oil. I've lately been looking at the oil charts a little bit. Like, is oil actually something that we could trade? And it actually is. It's totally fine to trade oil. The forex brokers provide you chance to trade oil as well. But yeah, maybe in 20 minutes I'm getting out of the charts if there is no chance for us. Gold gave much larger pullback, whereas silver did not. I don't really know what that means. Is that like a bearish divergence? Not really sure. This buy side action kind of makes me think that these are going to get swept. If that doesn't happen, I'm not going to short. You can see how Euro is bearish because it came into that order block and it just rejects like what do you want to call it? So this could be actually an entry model in itself. When you see this kind of rejection, when this candle closes, you could just simply get in shorts from that open, from the close of that candle. This kind of, and then you could have your stop up here. Maybe even at the candle high. So I don't really trade these kind of situations where you kind of look at how candle reacts, and I think I've been thinking of that. Maybe that could be a good way of trading because that kind of allows me to observe the price a little bit further before I make the decision of entering. Higher win rate. Maybe the risk reward wouldn't even be that much worse because if you think about it, yeah, the entry could be worse if the candle closes all the way down here. But we can reduce our stop a little bit lower, expecting that market will not trade back there anymore. Whereas if we just enter from here, I see this order block, but I also understand that even if it wants to respect that, we could wick up here and do whatever. Like, I don't know. You understand what I'm saying, so I need to backtest this a little bit, but I'm getting more interested in kind of waiting for the reaction in that area where we would be looking to enter. You know, or maybe try to look for something like this. So, for example, here, one entry model could be that entry from that 1 minute gap after the break of structure in the area that you're looking to see that, and then give a little bit of room for your stop. Maybe like that, and then just target shorts like that. Also, the problem is this choppy action here. So I'm still staying out of the markets, understanding that there's not high probability for me right now. When market kind of lines up perfectly for the shorts and the XY is starting to long like more heavily, I will be interested in taking, and I think we'll make a lot of money when that starts to happen. But as of now, we're looking at the structure and it's just chopping. So if nothing really happens, I'm getting out of the market after the London session solo bullet hour, which is over at 11 a.m. my time. Here, what the fuck, yo? Here. So one more M15 candle, and then we're done with this shit. But you can see how that could have worked, and we could still enter this nice engulfing candle. If we get like an engulfing candle, stop could be reduced all the way. So yeah, the thing is, I'm just staying out from this and I'm studying this because it's not fully my entry model, and even though it's kind of based on my entry model, and I'm kind of just having an application of that, I'm kind of applying it a little bit differently. So I'm just tapering this. So for example here, if I entered, I would enter from that candle, close, and have my stop down up here. And basically previously I would be entering from the fair value gap, have my stop up here, go for the short. Now I wasn't sure if that's going to hold, so I didn't want to take that, but then I see a market respecting that order block, giving that engulfing candle, and that's the reason why I could have taken trade in a situation where I would, from that close, in a situation where I would usually be uncomfortable taking a trade. So actually, this could be a good idea for an entry model. And then you could easily have your stop up here. And further reasons to go short is, okay, order block respected, bearish fair value gap respected, engulfing candle. This bullish has a bullish fair value gap, and that's the only fair value gap in this bullish range. And with disrespect that we inverse that, that's inversion. So all the bearish signs, bearish areas are being respected, all the bullish ones are disrespected. So this actually is a good trade to short. Now, because of this structure, I wasn't willing to enter, so this could be a good entry model to start backtesting and studying. So maybe like when you see a market respecting super well some area that you're looking to be respected, then you can have like a late entry, and in that situation it's totally fine to reduce your stop, because if you're seeing a order block be respected like this with that engulfing candle, you're never trying to expect, and you wouldn't expect market to run up to these highs again. So that's the reason why stop is totally fine up there, whereas in the initial entry the stop would have been either this high or maybe even this high. So, and this could be a absolutely great risk reward as well, because the initial entry would have been that fair value gap. So the risk reward 3.72, whereas here is almost 5. Obviously I'm not going to hold, I wouldn't be holding the whole position down here, but this is definitely something that I need to be thinking and practicing a little bit more. So wait to see rejection from the area that I'm looking at. Okay, let's take a look at my, because this is not looking like something that we're going to be getting into. So GBP again. Maybe this could be a setup that I would be taking if we see a market respecting these areas. But right now, for example, if that was my entry model, I wouldn't be in this trade as of now, because we are not respecting. So, for example, one confluence is that when we are in our bullish area, we want to see a bullish candle engulfing the candle prior to that. And if that happens, then we can get long. And let's say we get that bullish candle engulfing. Let's get wait for 30 seconds to see that candle closing. So this is definitely something I need to study, because I could even apply that to these setups that I've been journaling here. So let's see. Let's really quickly see how that would have affected on my trades there in terms of risk to reward. Okay, so theoretically we respect this. Okay, let's say this candle now trades to the upside and closes like this, meaning that it's understanding that it's closing above this and engulfs it. So if I entered from that closure, had my stop around the low of that candle and still targeted, let's say, the Asia high, that would be 3.33 R. Whereas if I entered from that, had my stop it would be 1.8 hours. So this is a model that actually could be more higher win rate and higher risk to reward. So I might be onto something. I'm gonna just do some real quick. And then if this kind of setup ends up not working, it wouldn't matter anyway, because we only enter if we see the more of these bullish signs. So this is actually a good way to utilize the markets, showing what it's doing. You know what I'm saying? This could be a good one. So, for example, at this point here, we are clearly not respecting this area, so this could be a way of not taking the trade, because we are not seeing what we want to see, you know what I'm saying? Whereas EURUSD could, with that anti-model, EURUSD is tanking right now, and we would be 1 hour up right now. That's mad. So let's just quickly look at this. For example, GBP NZD. I took that trade. So let's just take a look at that. GBP NZD. Okay. If that was 50-minute chart, I was looking to get in. So let's say we trade that engulfing candle. Here, I would have avoided loss because we don't get that engulfing candle. There's nothing that supports that. So no trade for me there. 1% saved that we got that Euro USD trade that I took short from that gap. Well, here now I understand that my bias was incorrect and I shouldn't have taken that because of the higher time frame bias, but so the problem wasn't so much that there was an engulfing candle. We don't really get that. I mean, we get that in M30 there. So if I entered from M30, had my stop up here, and I would usually go break even after this kind of thing hits. But yeah, this is a little bit like an odd one because yeah, this is the reason this is an odd one, because the bias is wrong. But yeah, let's say I tried to take something like that, I probably would have lost there, or broke even. In real time, that was break-even trade. So for example, then your Great British Pound. I believe I took that was Thursday, wasn't it? So it was here. It was kind of stupid trade, but that ended up running my stop immediately. I would have avoided that. Simple as that. Okay, let's go. This could be interesting. AUD USD. That was Wednesday, which is here. So we'll see break structure. Stop at that high. So if I try to, so this is trade. Obviously, I close break even because of the choppy structure. But if I use that model of engulfing, we reject that gap. Enter from there. Stop would have been that high. That would have been a loss. But that's because of the choppy nature. GBP CAD. What that was 24th was here. Oh yeah, so I tried to basically long this gap to go long. Now I would have said myself there, and I could have even got into another long there, like something like this, and maybe even M5 after you, I don't know, inverse there. And you know, one thing more, you can see how this would be working right now, but one thing more. So that was Friday, looking to take a short long from this fair value gap to go long towards this. Wait, what high was that? I believe it was, well, I would have closed above here because that was the high created at the 2R. So how would I utilize it in this kind of situation? Well, it would be kind of hard because market moves so fast. So if you want to wait for that kind of hammer candle to print and give you the swipe of liquidity and print, you would then have to enter from around here. So if that kind of hammer candle closed much lower, this could have been a possible entry to have your stop down here. But that wouldn't really have worked out. And I like these trades as how they are. So you don't necessarily have to. Then this is interesting. These are the trades now that I followed my rules perfectly. So Euro USD, July 23rd. So that was the short from here. So basically how that went was I had a short at that. My so was down there, targeted around 2R. Now how I would have, if I wanted to see a rejection from that fair value gap, how I would have moved with this is that I would have waited to see that engulfing there, stop at that high, and that would have been, even with that high, that would have been higher RR. But if I had my stop like somewhere here, the RR would have been much higher. Now I don't actually think the win rate is higher because sometimes it could manipulate a little bit further and then move. So I understand that. So this is something that I need to kind of backtest and see if I like it or not. But that would have been a nicer trade, maybe almost two times more profits. How about USD CAD? That was that 25th. No. That was trade from 23rd. So that was a long from 23rd that I took from that gap. So for example, in this situation, we would have not got anything, because if you want to wait for like a hammer candle, that means that your entry has to be here, and yeah, you can reduce your stop, but that's too bad at RR. Maybe if you're targeting 2 RR, you could have taken this and then moved your stop break even after this, and then had like a break even play. So yeah, there's definitely trades that you would miss, and definitely trades you would have break even that with my current strategy would win. So you kind of have to just work out whether you would like to trade like this or not. I think that this is more like like what you prefer, you know what I'm saying. That's 19th of Euro AUD. It's all the way down here. That's 18, that's 19. So how that went, basically, again, following trend, following rules, following everything that I need to be following. I believe it's from the M15 structure to enter from here. Stop was that low, and target was around 2R. Sorry, the target got hit there, so it's somewhere like that. So how that would have worked out? Well, we don't get the hammer. Sorry, the engulfing. How about M30? No, M5. Well, maybe you could like utilize like inversion in the range. I don't really like the structure in terms of the inversion, looking for that kind of shit. So technically the first engulfing is here, which means you could have your stop at that low, which could still provide you nice RR. So much better than the initial trade, and that takes much shorter amount of time to play out. Now the problem is that I don't necessarily need to use only like engulfing candles. You could use like dojis, like hammers that seem to sweep liquidity. For example, here you see a hammer with huge sell side wick, which means that you could just enter from that and have a little bit more room for your stop. Or maybe even if you had that, you would have won that. But like that kind of trade, I wouldn't be comfortable taking right now. And this is not strategy hopping, because this is just getting different kind of entry models for the same strategy that I'm using. So previously I would be entering from break of structure, stop. So whereas with this strategy, or this different entry model for the same strategy, I would be entering from the engulfing candle that happens, and then you could have your stop much lower and get better entry in terms of risk to reward. Even though you're selling, you're technically entering lower, but you can reduce your stop much lower because you understand that market is giving you even more confluence to go short. So technically, if you can utilize this the right way. Okay, this is a good example of how market could be. Or maybe this could be a way of me adding to the position, way for me to add to the position rather than the only pattern that I use for my entries. You know what I'm saying? This is from a 17th. So this was Super A plus setup in the AUD CAD, USD CAD. So you can see how I'm expecting. So there, we wick there, give that engulfing to that wick doji. So let's say you enter from here, yeah, have your stop around there. Target the same area as me before, so this would be the trade. And the initial trade would have been that, and the trade that I took was from that fair value gap. Stop. So that's actually good RR. So that wouldn't be really affecting to the RR. It's kind of similar RR, but there was also a M3. There was also M3 engulfing. So if you were super confident about this shit, no, that's an M5 fair value gap. You shouldn't really enter from the M3 engulfing in that case. But if that was your plan, that would be entry model. That would give you almost 3.5 RR. So that would be much higher. So this could be reducing your trades a little bit, but okay. Well, last one. Let's just look at this. So yeah, we're dropping in Euro USD. So the last example I would like to give is from here. So here we take that low, get break structure, fair value gap. The entry would be looking something like this. If you didn't want to take that, you could wait for the volume candle to break structure like that. So let's just have that also, though, so we can have the comparison there. 3. So that's also a better RR. So obviously in this kind of clear cut situation, I would be willing to enter from here, or maybe like after that wick doji candle from here at last, where I could be willing to then run my stop a little bit further down, because further up, because I understand how the doji is respecting. But you know, sometimes market gives these dojis and it still runs a little bit further to retrace, whereas I feel like if it gives a strong, that kind of engulfing hammer candle, in that case it's just running straight to the outside. Whereas with these dojis, it can give you doji, then kind of consolidate, maybe run to the doji low once more and then run. So in these kind of doji situations, I would still have my stop down here. Whereas today we had a good example of that hammer candle that absolutely demolished every PDRA in a bullish PDRA. So in this kind of situation, it would be totally cool to have your stop up here. Whereas if this was just a doji that I entered off of, I would feel a little bit weird of having my stop up here. But you can see how this tape reading idea ends up working out. And maybe I will start taking these kind of things in the future, especially if I feel kind of unsure about the bias, and then it kind of gives you this candle from that. So that would be a perfect trade. Gold's not doing much, so we're going to end the trade session here. I'm back in New York session. Nothing was identified in London. One EU short that happened here. We would be 2% up right now if I took that. Break even at last. But yeah. Stay on note for the New York session.